Hello, good weekend to all. This is a review for the FTSE 100 and the rest of the European markets for the trading session, the Monday, the 11th of January 2021. Please be sure to visit, obviously, my site, Twitter, YouTube, etc. Okay, so let's get cracking, folks. Let's keep this short and sweet and give you an insight into what's happening. Okay, in terms of the fundamental backdrop, then, basically, we've got the argument here, obviously, with regards to number one, obviously, COVID infections rising. Obviously, lockdowns certainly being exacerbated in terms of restrictions. I think over the weekend, I think a lot of individuals were fined 200 quid just going to the local mountains. It certainly is becoming a bit of a police state at present, unfortunately, and it certainly is getting more stricter. And obviously, individuals are certainly frustrated from that perspective. In terms of the vaccination rollout, it certainly is on the increase. Whether or not, obviously, that withholds or withstands the new strain and the new mutations, again, that's a different story altogether. Okay, so again, you've got the vaccine euphoria on the one hand, you've got the lockdowns and the concerns, the impact on growth going forward and job losses, liquidations, etc., etc. On the other, how long we remain in lockdown is another story altogether, and obviously the negative impacts in terms of growth, which I've already obviously highlighted. On the other hand, obviously, you've got US stimulus news, okay? US markets certainly going sky high. Again, very, very impressive moves in the S&P. I mean, just look at the actual move here, folks. Even an impeachment, obviously, news over the weekend, and obviously throughout last week as well, after the actual Capitol was certainly, all the rioters came in, etc., etc. It's interesting how when the Black Lives Matter, who obviously were protesting, it was bullet wounds, gunshots, etc. And when it's not the Black Lives Matter, unfortunately, it's just a slap on the wrist, and these individuals are allowed to walk right in and obviously vandalise the buildings. I think one of the actual stands that the president gives his lecture on, I think that's on eBay. So those of you that want to bid, feel free to bid for democracy. Okay. Again, it's a joke. It's an absolute shambles, really. And obviously, we all know the racist in chief, Mr. Trump, obviously has certainly exacerbated that and promoted that. And unfortunately, you reap what you sow. And that's exactly what we actually witnessed in obviously in the White House last week. Okay, so another story. Okay, so in terms of political instability in America, risk off. Obviously, impeachment notice is certainly being served. All the individuals that were backing him and supporting him are now obviously running away. It's all about political posturing, etc., etc. So it really is sad to see that, how you can support a racist and all of a sudden now it's a U-turn because that individual is no longer the populist vote. Nevertheless, that isn't going to go down, obviously, peacefully in America. Okay, the individuals there are thinking of, obviously, a revolution, and America has always been a violent nation regardless. So that certainly doesn't bode well. I mean, a country that was built on terrorism isn't going to, obviously, remain silent. So the political, obviously, instability and the ramifications of that are massive, okay, in terms of the dollar, in terms of gold. Oil prices certainly seem to be skyrocketing on the back of, obviously, oil. Saudi's cutting oil last week, and that certainly is being interpreted as being bullish. Yet we have lockdowns, we have a pandemic. I think the actual toll of individuals that are potentially affected or even infected has certainly reached 90 million worldwide. I mean, this is a shocking in terms of the numbers dying as well. I mean, almost 4,000 a day in the US, and obviously over 1,000 in the UK now. It certainly doesn't bode well. So a lot of bearish factors out there, yet these markets climb to new highs, as you can see here. S&P pushes to new high. Again, very baffling. Okay, is the stimulus news, given the fact that Mr. Biden is now proposing trillions in stimulus, is that sufficient enough to negate and send markets to new highs and negate the weak growth going forward in terms of job losses, etc., etc.? I personally don't think it is, but the market doesn't obviously care about my opinion or your opinion. The market is a market, and we have to respect the fact that it's actually pushing higher. How long will it push higher? Will it sustain itself higher? It's not built on any firm foundation at all on the back of, obviously, hopium in terms of stimulus. So last week you had stimulus news, and obviously the Saudi oil cut, which sent oil prices higher, which in turn obviously sent commodities higher. As you can see here, look at the chart of oil, certainly pushing higher. Very, very impressive in terms of Brent. Now we're actually retesting previous support equals resistance. If the market obviously continues high, even, like I said, amidst a pandemic, growth shattered, no transportation, lockdown after lockdown, and yet oil prices are moving higher, doesn't make sense. Just doesn't. I mean, you've had a rally from 35 to 55. I mean, you almost doubled in price almost now in terms of oil. Almost a 40% rally on the back of what? Just Saudis cutting oil production? I mean, that doesn't really doesn't bode well. Let's put it that way. Okay. Again, one could argue yes, stimulus news, but when stimulus news is negated by lockdowns, 4,000 dying a day in America. Okay, infections out of control, mutations increasing. Certainly, it's not. I mean, it's not a strong argument. Provided we didn't have an infection, obviously, provided we didn't have COVID, etc. Then obviously, that is certainly a strong argument. But certainly is baffling me at present in terms of fundamentals. Okay, certainly is baffling a lot of individuals out there as well in terms of the economists. A lot of warnings over the weekend as well about this being the biggest asset bubble ever. Okay, and one can understand why. You don't get a move on from 35 to 56 on oil on the back of just stimulus and hopium and expectations of earnings growth going forward when we can't even control a virus. It just doesn't make sense. It certainly doesn't make sense, and I'm certainly baffled. Okay, really baffled. I mean, last week I was shorting the market consistently on the back of a potential reversal, and yet this market just defies gravity and continues to push higher, even with rioters looting the White House, and obviously Trump calling for a revolution. Even that didn't deter the market, which really baffles me. Okay, that should have technically sent the market down almost 10%, yet this market obviously reversed to new highs. So very, very baffling. Obviously, ever since COVID as well, the COVID break. Now the FTSE certainly seems to be drunk with the oil rally, which again is certainly expected to a large extent. But when you have obviously a pandemic, rising infections, we've got a stupid clown as a PM, Mr. Boris Bojo Johnson. Really, his name is befitting of his personality. Really, he's a bojo. I mean, I'd call it a bozo. Really, absolute idiot of a PM. I mean, sends his kids back to school for a day just so they can spread the virus, and then obviously tells them to sit at home. I mean, it's been U-turn after U-turn. I mean, it just really is. His whole cabinet is incompetent. They don't really understand what's going on or even how to run a country. It's just shocking. And yet the FTSE obviously breaks new highs in the back of obviously stimulus and oil. So again, it's really tough out there. That's all I can say. Can you justify the markets pushing higher here? I can understand the argument, and the argument may well be relatively strong, but when you have the other side of the argument, which is a pandemic, an incompetent government that doesn't really understand what it's doing, only recently, after almost 9 months to 10 months, have they actually introduced obviously COVID tests for those that are incoming into the UK. I mean, it took a government almost 10 months to introduce that when more than 1,000 are dying a day. It's just shocking, truly shocking at present, okay, in terms of the incompetency. But nevertheless, markets are higher, okay, and we have to deal with that. Stop losses are in, okay, your emotions are out, okay, and let's see if we can break through this key level now, okay, on the FTSE 6850 zone, okay. In terms of the weekly chart, let's go purely to technicals now, given the fact that I've given you insight in terms of fundamentals. Obviously, we've got the bullish rally, obviously, last week, and as you can see here, we have this bull flag. But again, if I were to trade this market, I would never have thought that this bull flag would have played out. Even with oil prices rallying, yes. Even with stimulus, yes. But a pandemic negates that. One epic short squeeze, let's put it that way, okay. There must have been a lot of people short last week that obviously had to throw in the towel, okay, and that's literally what triggered that massive weekly candle. That's my understanding and that's my interpretation for now. Okay, so we've taken out this previous support equals resistance, which I did not expect to be taken out last week, okay. That was a solid resistance level which I was expecting to hold, but the market's taking it out. Let's move forward, okay. No point sulking, no point crying. Let's move forward. Okay, so now we've got previous support equals resistance at this key critical juncture here now, which is around the 6880 zone. Let's watch that level. And also you've got fib 75% resistance at 75%, okay, of the whole swing high to the low, okay. Now again, previous support equals resistance just above at 7080 as well, and then you've got the 200 MA that's lying there as well. Okay, so this again is a very, very important point, okay, in terms of inflection, should I say. Let's just bring this line here as well. So you've got inflection, okay, inflection. So this is a key, obviously, war zone between the bulls and bears, okay. Very, very unlikely for it to go above the 7100. Again, if it does get there, I'm certainly looking to short this market because my understanding it's built on sand, okay. Can it withstand this? Can it sustain this? Certainly not. Okay, if you are going to be paying the commodity rally in the back of obviously US stimulus, where's the demand? Okay, You really are looking into the future. Okay, that's what I can understand and interpret. You've already got yields starting to move higher now as well, and the Fed also did signal that they potentially are going to look at obviously quantitative tightening. Okay, so in 2023, 2024, probably in 2022, I mean, given the fact that commodities are rallying and it's triggering inflation, oil price rally equals inflation, therefore obviously interest rates certainly have to rise, which means quantitative tightening, and this market's going to tank. Okay, because it's all built on stimulus. Okay, again, I'm not going to go into that rant. It certainly is baffling right now in terms of the market price action. Again, how much stimulus can you forecast? I mean, we've started to forecast stimulus around here, and yet the FTSE was trading around the 5,500, and now we're almost at 6,870 and potentially touching 7,000. Very, very impressive. Had there been no pandemic that was obviously negating growth, then obviously that argument is strong. But given the pandemic, given the fact that we've got a totally incompetent government, given the fact that we've hit over 1,000 now, totally out of control, we're in lockdown, God knows how long we're in lockdown for, and yet this market is riding higher. Truly, truly baffling. Truly baffling. Anyway, it is what it is, and again, we just have to move on. Okay, so daily chart. Okay, key resistance, again, 6860 zone. If we take that out, you are looking at around 7,000, 7,050. Again, this is a key inflection point. Watch out for this on your weekly charts, folks, okay? And it'd be interesting to see if we do actually sustain this rally higher. Okay, let's see if we can do that this week. We've got a topping tail in the 60 minutes on the FTSE chart. Okay, certainly looking for that to hold. Not looking for obviously a move above that. We did get some cheeky price action after hours, touching almost 7,000. But again, this is why, as traders, my understanding and my interpretation recently has been to increase your stop loss, because there's a lot of hanky-panky going on, especially with regards to the obviously volatility, given the storming of the White House, given the talks of stimulus, impeachment, etc., etc. Okay, nevertheless, we've got this key diagonal trend line. Let's see if we can hold this 6880 zone. Obviously, pivot high is 6905. I'm looking to potentially retest the 6795 zone on the downside. Obviously, if that cracks, you do have an unfilled gap below at 6620. So if we get that epic sell-off, that would be very, very impressive, and that's exactly what I'll be waiting for. Okay, certainly bias, my interpretation is on the downside, especially with this incompetent government that we've got at present. Okay, U-turns, and I mean, what can I say? I forecasted this stupid government a long time ago when Theresa May was in power. Again, yes, they were at one time better than Labour, but they've scored too many own goals now, unfortunately, and they certainly need to go, and it needs to be a regime change for us to actually improve. Nevertheless, okay, again, let's see the German DAX. Again, German DAX are very, very impressive. German DAX, again, the death rate certainly spiking there. Certainly, Germany was obviously the leader at one time in terms of COVID. It was a New Zealand of Europe, and yet it's fallen behind. Okay, nevertheless, weekly chart, very impressive. It's a breakout. Okay, it's a breakout. You have to respect the breakout on the weekly chart. That is super, super impressive. Obviously, it's triggered and spurred by the US stimulus. And obviously, the ECB has its own stimulus. Now, one of the things that's really baffling for me is the Euro USD. The Euro USD is hitting that high at 1.23, and yet German DAX still pushing higher. Very, very impressive. And obviously, it's led by the Chinese as well. Chinese obviously fully recovered in terms, although having said that, bear in mind they have closed off 2 regions because there's been a spike again. So again, that certainly is a risk-off scenario given the fact that we've got these mutations and obviously infections growing around the world. Yeah, obviously the market's interpreting as bullish because they're relying on this stimulus. Okay, so Chinese obviously are the ones that are obviously triggering this rally higher and moving it higher. So again, it has to be respected. Okay, so daily chart, let's have a look. Push higher. Okay, and looking to potentially reverse. We did get a bearish candle on Friday, and let's see if we can continue that reversal on the move way down. 60-minute chart at the moment, you do have a lot of unfilled gaps below, so again remains vulnerable. Bear that in mind. And let's just quickly give you an insight into the French CAC as well. French CAC weekly chart, again helped by commodities to a large extent, but still into that key resistance zone. Macron certainly isn't doing a good job at present. Daily chart, again, how we have broken higher, we have closed a gap here. The next gap is above, is around the 6,030 zone and potentially higher, so watch out above in terms of the French CAC. But I do think the French CAC is a weak link in Europe right now. Okay, I think that's enough of my rant. Almost 40 minutes of this rant now, unfortunately. Be sure to visit, obviously, my site, YouTube channel, etc. And I'll keep these videos going. Take care. Goodbye.